Right now, there is a fabulous bull market in snacks. A bull market led by Mondelez and Hershey, both of which have exploded higher in recent months. These are both great companies, but because I'm a big believer in diversification, I don't look too kindly on owning two stocks in the same industry, as you know from when we play Am I Diversified. Not if you're trying to manage a portfolio of 5 to 10 stocks in your mad money portfolio, right? Because if you own more than that, doing the homework while you're holding is going to turn into a part-time job. And by the way, you'd be a mutual fund. Think of it like this. Think of it like the movie Highlander. There can only be one. So if you're only going to buy one best-of-breed packaged food stock, which of these two snacking kingpins should it be? Mondelez or Hershey? Now, I've recommended Mondelez repeatedly in recent months. I think they have a terrific handle on snacking with an extensive portfolio of brands like Nabisco, Oreos, Chips Ahoy, Toblerone, Nilla wafers, Trident gum. Hey, let's throw in some other gum here. Let's throw in Dentine, Tate's Bake Shop, my personal favorite, among many other brands. It's been a big winner for us. Then last month, we highlighted the incredible transformation of Hershey, which has gone from a company mostly focused on candy, like chocolate, to a more diversified snacking play, thanks to a series of brilliant acquisitions. Stock has already run so much that I told you to wait for a pullback before doing any buying. Turns out I was too cautious again, as Hershey has tacked on another $9 since then, practically in a straight line, but that's highly unusual, people, though, as you know from the top of the show, these stocks are working. So which of these two is the best snacking company and which is the best snacking stock? You know they can be different things. These are both incredibly well-run companies. Under the leadership of CEO Dirk Van de Put, Mondelez has turned itself into a lean, mean, money-making machine. Hey, we spoke to him in May. He told a very compelling story.
They're snacking, well, because it's a lifestyle change. Consumers are more on the go, they eat more out of home. Millennials particularly don't really want to sit down and have a big meal. They want to sort of fuel themselves, and they eat 7 times a day. And so snacking is really growing as a habit, and also the market is growing as a consequence.
Yeah, I can be a millennial now and then. Anyway, in other words, the snack food... Why does my wife like that so much? I don't like the almonds. The snack food category is on fire because millennials have some crazy aversion to eating actual meals. And Mondelez has been leaning into that shift in consumer taste. Meanwhile, the company's got a huge international business where they're very good at tailoring individual products to what people like in each particular market. If you go to Italy, you stop in Italy, road stop, it is just mountains of Mondelez. Mountains! They got Toblerone cabins! Now, for many months, we've been hearing that Mondelez was trying to buy Arnott's. That's a baked goods brand from Campbell Soup. But last month, they walked away. Hey, you know what? I'm glad they did. It shows that Van de Put's discipline. He's not going to overpay. 2 weeks later, the company bought a majority stake in Perfect Snacks. That's a major player in refrigerated nutrition bars. You know, perfect, right? This one's still tiny, but the nutrition bar category is growing. I love that the staff actually have the refrigerator and it's cold. That's very thoughtful. All right, how about Hershey? Under the leadership of CEO Michelle Buck, who is just completely under the radar screen, this thing has caught fire. Just like Van de Put at Mondelez. Now, she took over in 2017. She's diversified away from candy via a series of mid-sized acquisitions, namely Skinny Pop and Pirate's Booty. I love this stuff, okay? These deals have breathed new life into the company's once stagnant growth rate. Meanwhile, she's cut costs and she's gotten more aggressive about expanding overseas. Although Hershey is still heavily concentrated in the United States. Wow, they got a green field overseas, though. Lots of runway. Like I said, they both got great stories. But okay, so how do they stack up against each other quantitatively, which is what I want to teach you how to do. Let's go through the major line items on an apples-to-apples basis so you can do this at home. First and foremost, we care about revenue growth. That's why these two stocks have outperformed the rest of the packaged food space. They've got great growth. Last year, Mondelez delivered 2.4% organic revenue growth, which accelerated to 3.7% in the latest quarter. Going forward, the analysts are looking for just 0.1% net revenue growth this year, with that number picking up to more like 3% in 2020 and 2021. Now, that may not sound like much compared to the turbocharged growth you're now getting from Coca-Cola, as I mentioned at the top of the show, but they're good, consistent numbers. People like that. Hershey. Last year, they delivered just 0.3% organic growth, although that accelerated to 1.9% in the latest quarter. Going forward, Wall Street's looking for about 2% net revenue growth annually through 2021. This is a tough one. Mondelez has the better organic growth in recent years, internally generated growth that doesn't come from acquisitions. But when you look at total sales, Hershey wins. While we normally look at these numbers on a constant currency basis, meaning we adjust for foreign exchange fluctuations, you need to know that Mondelez is getting crushed by the strong dollar. They get 75% of their sales from overseas. Hershey gets 84% of their sales from the good old United States. As long as the dollar stays this strong, I think Hershey wins on growth. However, if we see a major pullback in the greenback, that will, which we sure have, and it's the strongest ever today, that will give Mondelez a gigantic boost and put it in the lead. All right, how about margins, what they have left? Both companies, after they sell, both companies have been very good about controlling costs in the last few years, though Hershey delivered substantially more margin improvement. Whether you look at the gross margin, what they make after the cost of goods sold, or in the operating margin, the percentage of sales that are left over as earnings before paying interest or taxes, boom, here we go. In terms of earnings, Hershey and Mondelez have had pretty similar profiles historically. However, this year Hershey has pulled ahead. In the first quarter, they posted 13% earnings growth versus 5% for Mondelez. And for the full year, the analysts are looking for 7% growth versus 3% for Mondelez. On the other hand, Mondelez numbers are expected to accelerate to 7% in 2020 and 2021, while Hershey's may slow to about 6%. Still, this is another one where I have to give the edge to Hershey, especially since this is really important. It's got all the analysts who hated the stock switching to buy. Their main competitor is a private company called Mars. And Mars just put through a 9% price increase on single-serve chocolates. That means Hershey can keep raising prices, too. Again, like at the top of the show when I said these companies have pricing power. While Mondelez has some chocolate exposure with Cadbury, which is a really, really good brand, chocolate is still Hershey's core business. This is Cadbury. I like Cramer. All right. How about overall quality of the recent acquisitions? Last year, Mondelez snapped up Tate's Bake Shop. Now, this makes delicious, crispy cookies. And guys from Mondelez, you can keep sending us those. They send us to them all the time. I love it. Now, this was formerly known as Kathleen's Cookies, for those who spend a lot of time in the Hamptons. Hershey picked up Skinny Pop, okay, and Pirate's Booty. Who wins? Again, I have to give the edge to Hershey. Now, don't get me wrong. I love Tate's Plus. Okay, I had, more importantly, a wicked, unrequited crush on Kathleen herself. But Hershey's recent acquisition have allowed themselves to diversify into whole new categories, whereas Mondelez didn't really diversify here. They already made cookies, right? I mean, come on. Although it's sacrilegious, I think, really, to even include Tate's in the same category as the humble Oreos. By the way, completely requited love, if you want to know the truth. Overall, I think Hershey's pretty clearly a superior company, although not by a wide margin. But, boy, the analysts are so negative on it. One by one, they got to go buy, from sell to buy. What about the stocks? While they have similar dividends, 1.9% for Mondelez, 2% for Hershey, again, not as good as the two stocks I talked about at the top, Kimberly or Coca-Cola. They're very different valuations. Mondelez sells for 20 times next year's earnings estimates. Hershey sells for 24 times. Mondelez is actually a little cheaper than the average packaged food stock, which is strange given how it's got a superior operator. Hershey's is great, but it's much closer to getting the high valuation it deserves. Plus, both companies are reporting very soon. And I think Mondelez has the better setup going into earnings. Hershey has caught a series of upgrades in the last month that I mentioned as analysts catching up. Stock has rallied more than 25% since the last I reported. When we hear from them on Thursday, I suspect it will be hard for the stock to rally. Mondelez, on the other hand, reports in a week, and it's up less than 8% since the last quarter. I'm liking this one. So who's the new king of snacking? The bottom line is that Hershey is the better company. But that's already baked in when it comes to their stock. Given how much Hershey stock has run, I feel much more confident and comfortable buying the stock of Mondelez here. But if Hershey sells off, despite reporting good numbers, later this week, you gotta be ready to pounce. Let's go to Sandy in Kansas. Sandy!
Hey, big booyah from Topeka, Kansas. Jim, thanks for taking my call.
Right back at you.
With the recent changes at Canopy Growth on the CEO, are you still optimistic on that?
I am, but remember, the whole group is under a lot of pressure. It still remains Canopy's number one and Kronos is number two, but GW Pharma is the one that people want because that's the one that the FDA is blessing, and they're not cutting a break to Canopy. Wow. All right. Sometimes it just doesn't come together. Hershey is looking at us for like a snack right now. It sells off. You got to be absolutely ready to pounce on this one, okay? Mondelez isn't a bad buy either. All right, much more mad money yet. The man, the myth, the shark. Tonight, Damon John from Shark Tank is lending his entrepreneurial eye to help spot the market's next hot trend. So come on in to what may be fun. Then looking for a guru in this market? I'll tell you why it might be time to think again. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.